Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. It's the 26th of November 2015. That means there's less than a month until Christmas. That means there's probably only 3 weeks of real trade before things get really thin for the holiday season. That means that in the next week or so, I'm going to be coming to you with an offer for my subscription service. But I'm also going to survey you in the next couple of days. So if you could get that back to me, because I'm building this for you. This is going to be my job, I'm not going to go off and work for a broker. I'll have agreements with brokers, and some of you can open an account and get a rebate on fees, all that kind of thing if that's what you want. If you're happy with your current arrangement, then stay with your current arrangement. It's just an offer for some people, but if you could fill out the survey and then I'll be able to come to an offer that on balance suits the audience. I'm also going to ask your indulgence today. Stick with me. This is going to be a long one. I did my weekly scan on the weekend, and I'm not one to chicken little, but goodness me, I was struck by the price action, how weak it was, and how dangerously placed stocks, and therefore all markets, are right now. So let me just kick off. This tweet you can see right there, where I just say spot on, but about what Sun Chartist said, which was that the biggest downside moves are almost always when markets are midway or oversold. WTI is classic in that respect. And that's the thing for me. When we look at the various markets, when we look at the NASDAQ, when we look at the S&P 500, when we look at the Russell, when we look at Apple and the NASDAQ, when we look at crude oil and its relationship with stocks, there's a real chance that if there's ever a setup for a market, collapse, crash, whatever you want to call it, then this is the week. And it may not be this week. It may not be today. It may not be tomorrow. But as I said on Twitter, and as I've said in Markets Morning, the written piece today, we need to start thinking about 2,000 and 2,100 as longer-term levels for the S&P 500. Now, where are we now? We're at 26.27 or 26.30. We've got the Russians kicking off in Ukraine. Probably shouldn't worry markets too much unless things kick, really kick to the next level. So we'll have to wait and see. But the market is at a dangerous juncture. And if we do see October's lows give way and hold in the S&P 500, noting that Friday's close was the weakest weekly closed since about sort of March or April, I think, then we are looking in a parlous state. Anyway, just remember that. I know I've said it over the last few weeks, that collapses happen from falling markets or from weakness. That's why I retweeted that. That's the key thing to remember. I know I'm running over, but this is going to be a long one today. Here's the S&P 500 versus crude oil. Now, it's not the best, is it really? It's not the biggest deal in the world. But one of the things about the rally in crude was that when it kicked off, the S&P started to kick off too. And it's a reasonable proxy. The other thing about this, which you can't see, is the impact on the collapse in crude on the JNK ETF. That's fallen through the floor. And, junk bond spreads are rising. So you've got to keep an eye on this. Could this, if we take out that low, could this then see a collapse in the S&P 500? The price action suggests it could. The DAX looks terrible. The SPY is looking not so hot. The FTSE too. The Dow is right on. And we'll walk through the weekly charts in a moment. But I just want to work through a couple of charts that are extra to my normal pack. Now, this is the one that I think is possibly the most important chart on the planet right now. It's Apple and the NASDAQ. Now, this is chart 25A from my chart pack that I do on a Saturday. You've seen it. You haven't actually seen it, but I talk about it. So I put this in just as an extra. What you can see is naturally Apple is a big impact. So Apple's got to hold support. Otherwise, the NASDAQ falls. If the NASDAQ falls, then we are talking about some significant further downside for the NASDAQ and through the NASDAQ for the FANGs and through the FANGs for the broader market. So we just have to keep an eye on that. if these levels break. So keep your eye on that one. And this is the Russell. The Russell looks to me like it's going to retest that low there. If it breaks, then we've got a whole other kind of situation opening up. Now I'm going to walk through, we've been talking about stocks, we've been talking about how they're set up now. So let's walk through the normal stocks. That's dollar Sing, you don't need that. Let's walk through the normal stocks that we go through, and then we can come back to what's going on. So the S&P 500, look at that. Close, isn't it? Really, really close. Really close. And, you know, you could argue that it doesn't have to fall far. If it gets and closes below 2,600, then we're talking about 2,500. That's no big deal. But if I shrink that down a bit, if I give you, that's a bunch of messiness down the bottom. If I take the, you'd have to got to go to the monthlies and spread it out a bit. Get rid of this. No, bugger it. Basically, if I do that to there, roughly, right? Then you've got this 2,100. I'm pointing at the screen. You can't see that. You've got this 2,100 level anyway as the 38.2% retracement. So on a monthly basis, the 38.2% retracement on a monthly basis is 2075 or thereabouts. And that is the level which is there. That is a level that I think we need to start thinking about longer term. For the moment, as long as the S&P holds above 2,600, no need to throw the baby out with the bathwater. But if it breaks, I'll be going with it, looking for 2,500 initially, then we'll see how it goes. Now, of course, that's just before President Xi and President Trump meet. So it's obviously a dangerous time. And you know that the way that we do this, the whole point of what I do it daily in written form and here on video, because in a sense, it's like situational awareness. You have to know what's going on around you so you can know how to make a plan for what's going forward. So that's the whole point of what I do. It's to help me and you get better situational awareness so that when we get the fundamentals and the technicals tying together, then we can make the trades that work. So that's the key. That's my whole point. In some instances, I'm the weatherman. You decide what you want to wear, but I'm telling you what the atmospherics are going to be. Situational awareness, same sort of thing. Anyway, so that's the S&P. 2,600 is key. If you have a look at the Dow, you can see a similar. I've done these differently on purpose, so you can see the different setup. So that you can see, if you have a look at this again, that all charts are not the same, but they are similar. And so we've got a very close level on the Dow. Now the low, I'm just going to move that up there. All right, so we can see the levels. That low there was 24,084. So let's say 24,000. Dow falls through 24,000. We're talking about 22.5 or thereabouts. So it's not far from where we are now. In terms of the NASDAQ, I can't see the NASDAQ there. Oh, actually, I know where it is. I've got to do this, don't I? Sorry about this, folks. It's going to go through and do all of that, and then it's going to pop it up at the bottom. Come on. Come on. Yeah. Lovely. There we go. Sorry about that. All right. So, it's already taken out that low, and it's pretty straightforward that 6,250 to 6,300 is a reasonable target. You know, I think I've been saying that for ages. Whenever I go on Your Money, which is, the Australian-based business channel, I've been saying that for a while. And you can see that too. It's a nice little level of support, that 6,250. So that's my base case. And if Apple holds, well then, hey, maybe we get a bounce before we start to head down there. But that's the base case at the moment. In terms of the local market, we are back. Have a look at markets morning. Last Friday's price action was pretty interesting in terms of the long-legged candle. The bears won that one. The bulls won last week in terms of the Aussie market because we bounced off that support in the 55.85 to 5600 region. But if we get down and through that, we get down and through 55.85, shot duck. We will be talking about levels down here near 5,000, that kind of thing, if we get down there. Now the DAX is stuck. The DAX is stuck below 11.7. The DAX has not been able to. So there's your range, right? Technically, when I say technically, you know what I mean. But theoretically, that's a shoulder, that's a head, that's a shoulder. That is 11.7 to 13.5. Call it 2,000 just for rounding. We've broken through 11.7. That gives me 9, basically here, 10,000, roughly, is the level that I've been aiming at. And I retain that target. It's just above 11,000 at the moment. But a break of 11,000 gets me 10,000. If it holds above 11,000, holds above last week's low, then I won't be jumping out the window. But if it does, then it opens up 1,000 points. Now, looking at currency markets, I just want to show you something first. Right, this is the Citibank Economic Surprise Index. Now, you know that I use this. Why do I use this? Because there are fundamental drivers of currencies. You know, inflation, trade balances, services balances, all these different kind of things. You know, there's a myriad of them. PPP, all these different ways. Big Mac Index, all this kind of things. I'm being a bit trite, but you know what I mean. But one of the things when you get an asset which is financialized, which the big currencies are, so copper and some of those other traded commodities, what you get when you get a financialized asset is that it gets driven not necessarily by fundamentals, but by people's perception of fundamentals. And so it's a second order thing. It's like that Keynes comment about it's not who's the best looking bloke or woman in the beauty parade, it's who people think. Other people are going to think is the best looking person. So it's a second degree or a third degree. And he talks about even in the 30s, I think when he wrote that, a fourth or fifth and higher degree. And so what's important with the Citibank Economic Surprise Index is it helps show you where the data is printing relative to expectations. And in doing that, it helps give you a sense of where perceptions might be shifting. And thus, perceptions about the economy lead to perceptions about the overall economic growth and therefore central bank responses. That's a long-winded way of saying you've got to watch the CC. That's why I talk about it all the time. But have a look at this. Save for Australia, everybody, and perhaps the BRICS, everybody's struggling at the moment. Now, if housing turns down, then Australia will struggle too. But for the moment, look at Europe. Those PMIs on Friday night were disgusting. Well, they weren't disgusting, but they were much lower than expected, almost a full point. And so we've had economic surprise index collapse to negative 65. Now let's put the PMI base tracker from JP Morgan against GDP. What have we got? We've got weakness. That's what we've got. That's why Euro fell on Friday, right? The US too, its data fell. This is why the Fed is thinking, maybe we do need to pause. So we've got to watch out. We've got 4 ECB speeches tonight, including Chief Economist Pratt, Corday, Nowotny, and Draghi, right? And then we've got Clarida tomorrow night, the Vice Chair of the Fed. Powell speaking on Wednesday. Big week. They're going to clarify things for us, so it could move currencies. All right, let's look at the charts. Weekly euro, right? We can draw this line in here, I think. It comes in about 116 or thereabouts. Let's draw that one there, right? So we've got this, you know, this pennant, this wedge, whatever you want to call it, forming, tightening for a resolution. Euro gets down through 112, figure 20. We're talking about 108, figure 20. If it gets back up through 116, well, it's got to get back through 114 sort of and a half to 115 before it can do anything. But you know, the kind of the 116 region is where we're at the moment. You'll notice it hasn't got back above my 30 EMA recently, so it potentially base building, but at the moment that price action last week didn't look overly pretty, so or handsome, depending on your bent. So keep an eye on that one. In terms of dollar yen is remarkable in many ways because it hasn't reacted. It's hardly reacting this morning. It's 112.90 at the moment. When there's this Ukraine stuff going on where stocks have collapsed, but it may react soon. The key thing that I took away from my scan on the weekend was that we really need, and I know that you know this because I keep saying this, but it needs to get up and through 114.50 to 114.75 to really kick on. Then we'll be talking about 118 on. Then we'll be talking about a significantly stronger US dollar. We'll be talking about the euro at 108. We will be talking about DXY at 100. But effectively what I've said on a monthly basis supports at sort of the 110, 195 region. And that trend line you can see there is 111.99. So about 112. If it broke down through 112, then we're going to be talking about 110.74. My sense is in the current backdrop, if the stock move happens, is that we will head down towards that 110.70 odd. So that's a couple of 100 points, potentially. But then again, you've got 150 to 175 points on the top side as well. So risk reward's kind of skewed. Better off to trade the break of the trend line than try and preempt it. But if equities go off, I will find it difficult for dollar yen not to react. I know I'm already 15 minutes in. This may end up being 30 minutes, folks. I do apologise. Right, sterling. Only thing I can say about sterling is it's in a range. 126.60, 133, figure 20. Break either side, runs 3 to 6 points. Big figures, I should say. All right, what have we got? EU has said yes. The leaders have agreed. Theresa May's now got to take it back. Emmanuel Macron did not do Theresa May a favour, nor did the Spanish president, whose name I've forgotten, Sanchez, I think, because both of them highlighted what the Brexiteers hated about their relationship. So we're getting bossed around. Now, Macron about fishing rights is a big issue. Well, all we've done now is we've got an agreement, a deal around the agreement to leave, not an agreement about the next phase. So we're halfway there. So from a hard Brexiteers point of view, this will have reinforced to them that this is not a good deal. And from a Remainer point of view, this will have reinforced to them that why the heck are we doing this? So it's going to be hard for Mrs. May if she can get it through, and she's appealed directly to business, directly to the people, the British populace. We can get through, but it's still a couple of weeks. So lots of water to flow under the bridge. And at the moment, that range is holding. 126.90 is obviously the recent low, then 126.60 as support. 130.65, 131.65 on the top, then 133 is where we're looking at. Aussie dollar, pardon me, weeklies, I never know where anything is because they're all different. Right, an inside week. So we had that big move the week before, naturally, and now we've had an inside week. What does that tell me? Nothing. It's ominous, and if we've seen inside weeks in a number of assets recently, they've mostly been resolved to the downside. Now, is that going to happen with the Aussie? I don't know. But it's got to break 73.40 on the top side or 71.60 on the bottom side to do anything. Within that, on a weekly time frame, I've got no clue if I just look at that chart. And that's all I'm doing. I'm just looking at that chart. Now, Governor Lowe speaks tomorrow night. He may have something to say. His last speech, a week or so ago, did seem to infer some concern about the economy. So we'll see what he says. Then, of course, towards the back end of the week, we have construction work done and private new cap expenditure. They're partials for the GDP, which is coming up soon. So from my point of view, inside day, break either side is where it kicks. This is the weekly chart. The Kiwi just had some appalling... Oh, got to do dollar CAD first. I'll come back to the Kiwi. Right, so what struggling, right? Got to go higher, surely. You know, you look at that. You know, I look at that. And, you know, it's one of those ones, dollar CAD, right? Pointing higher but struggling to break free. I could break into a Queen song for you if you like. That's the key. That's where we are at the moment. Apart from that, it's trapped between two trend lines, medium-term trend high, support 130.90, break of this week's high 133.20, and it kicks. So they're the key parameters. So it's about 100 points from a break and about 130 points from support. Again, weekly charts. The Kiwi, if I can see the Kiwi, can anybody point to the Kiwi? There it is. Inside, hanging ominously. Stochastic up here. So again, it's above the 30 moving average, and the angle is changing. The MACD is coming together. If it can hold above that 30 moving average for another week, and given those awful numbers that we saw this morning in terms of retail sales, then it can do well. But again, either side of the break, and you should kick. You will get a decent move either side. Now, obviously, at present, both the Aussie and the Kiwi look like they will resolve to the downside. But no, you can't preempt that. The thing about this, you look at a monthly chart, right? They're bars or candles, right? You can't make a decision about what's going on in the middle of a candle. If you're trading 5-minute charts, you've got to wait for the end of the 5 minutes before you can resolve which way it's going to go. It's the same with the monthly and same with the weekly. So so over the course of this week, we could get moves higher and lower. It's only if we break one of those parameters that we can then know. But we won't know until Friday what the absolute move has looked like. Now, if I go on to commodities now, Chinese yuan, I'll just quickly do Chinese yuan. Still holding, okay? If it doesn't go through 698 to 7 in the next little while, if it's a good chat with the US and with Presidents Trump and President Xi this weekend at the G20, then we can see it back at 689, 87, and pardon me, 78, potentially even 669. But if it breaks 698 to 7, it goes to 7.25, and then all heck breaks loose. Dollar Sing, which looks like it's rolling over. So that's interesting from the US dollar point of view. I'm watching for that either to roll or break. Now, this is taking weeks. This has been a topping pattern for Dollar Sing, which is either a pause and getting ready to break or a topping pattern. It's taking weeks to resolve. Now, looking at gold, and I'm 21 minutes in, so it's still got the uptrend, still holding. This is a good example of what the Aussie and Kiwi could do. They could have a down week but still be in an uptrend. So keep an eye on that. Gold for me, as long as 11.95 to 12.05 holds, looks okay. Everything kicking off, it should be doing better than it is. It's not. That's a warning. Silver is all over the place at the moment. It's really volatile. Had a big down week last week. Basically, it's got to hold above 13.89, otherwise it can lose $2. And we've got 15 on the top side. In terms of copper, copper has got a clear top on it at about 286.5. It's got a clear bottom on it about 264 and then 255. Copper will run with the Aussie based on perceptions of what's going on in global growth. An asset that has nothing to do with global growth, although people are reading into it, is the liquidation that we've seen in Brent. So what have we got now? We've had a break of this trend line, this channel. We have had a close in terms of this. Back down here, 58. It looks to me like it could still go lower. So keep an eye on that. Catch a falling knife. It might be time to buy options, buy some calls for Brent and WTI. And I'll find the WTI chart in a sec. There it is. So you can see here, this is a better chart than the Brent chart. Depending on which account I sign in, there's more data. There wasn't enough data on that Brent chart on this server. So what do we got? We've got this move here. We've come back 50.25. So this is slightly different because I've used that move. If I use that move, then the break of, I think it was 51.50, opens 45.45. So just on this move, this would suggest a close below 50.25 gets you another $10. I know that sounds ludicrous. We've had 7 down weeks in a row. We lost 10% in WTI terms last week. We lost almost 8% on Friday. So in that sense, I don't know how that happened. In that sense, it looks really weak. So this is real catch a falling knife. Now, OPEC is clearly going to try and do something, but have a look at Markets Morning, the written piece. Trump tweeted against the Fed and OPEC over the weekend. That complicates things, particularly with the Khashoggi murder and Mohammed bin Salman. So that's it, except for Bitcoin. Is this the messy one? Not too bad. So this is the one that says 873 is actually the target, because that's this big move. So have a look at this. This is where the 873 comes from. So we've got 100 down to here, so 6,000. So 19.4 down to 6,000. Now, of course, these aren't perfect levels, right? So let's just say $1,000, right? So we got get a move, then we get a move back to 38.2, and then we get a break. This is classic Greg McKenna #1 system, first ever system. 873. The daily stuff has been satisfied. 3471 or thereabouts. We had a low below 3,500 on the weekend. So, but longer term, look at that. Righto, that's it from me. 25 minutes. I got it under 30. Happy days. Don't forget, look out for the survey. Any thoughts, please put them on YouTube. I answer every single comment. Let me know what you think. I'll be back tomorrow. Happy trading. It's going to be a big week. Watch those stocks. That's the key to everything. And keep an eye on what's going on between Russia and Ukraine. I think it's Vladimir Putin posturing before G20 because the focus is on other people. But this Azov or Evolve thing has been going on for a little while. Anyway, I'll catch you back tomorrow. Bye for now.